Hey, happy Friday for everybody out there. My name is Ruben Rodriguez from Tenacious Tribe. Thank you so much for watching sixth episode of our YouTube series. And hope you guys have had a fantastic day trading. Hope you guys have made a lot of money in the markets. I've seen that S&P 500 and especially the S&P 500 was very rewarding today. Be careful be careful these days because yet again, as reinstated in previous episodes, in bear markets, the fact that we're in a bear market does not mean that we're gonna have upswings. It just means that the downswings or the low swings are just steeper and deeper than the upswings, so to say. That's how the market moves: down, up, down, up. See, the upper swings are smaller than the downward swings. See, that's what we've been getting here all over through the S&P 500 during this bear market. I can't even call this a swing, I guess. But, look at this. Now the market is getting back to a potential resistance area, so watch out. Like really, this was a very enthusiastic day. The market is not in a confirmed uptrend still. Hell no, we need to let the market give us more proofs than that this might be the end of this downtrend and maybe transitioning into a sideways market before a new bull market steps in. However, as per our work and what a lot of analysts out there are also saying is the odds are we're just halfway there to the bottom. So just be very careful these days. Don't get overexcited about these days. And if you're beginning trading, if you're beginning investing, I wouldn't. First of all, I mean, I've been around. I've been looking for setups. There not many setups out there. Not many bullish setups out there. And even the ones that exist, maybe even those ones you should avoid. Should avoid trading because bear markets are when the bears step out from their hibernation. They step up they step out with a full rage, and they just overpower enormously the weak bulls out there, which have been bleeding for the past months. So be careful. Once again, of course I like to comment S&P 500 every day when I step in here. However, the main reason why I'm producing this video is just to analyze the trading asset of the day. Today, what I got for you guys is Tesla. Tesla was not the most traded asset throughout this week and throughout this day. However, Tesla was definitely the stock moved more money this week. It's different from 100 million contracts traded in a penny stock, which is worth €3, and 50 million trades in a stock that's worth right now $737. The stock moved a lot of money this week, and of course it triggers some curiosity. And here I am to try to draw a bullish and bearish scenario for Tesla. Try to understand what the charts are trying to tell us about Tesla, and off we go. As you already should be aware of, I like to start with the longer time frames. They're my favorite ones because they're very good at keeping my emotions in place. So let's start off. Okay, what we see here? Trend here. I'm still referring to the previous bull market, of course. This trend here. This trend was smashed 3 months ago already. So this means that we are transitioning into a distribution ranging market, or perhaps even a bear market. Something else I see here. Look, higher high on the price, and we do not see the corresponding behavior in the RSI, which means that there's a bearish divergence here. So the odds are this enormous bullish candle would not have tricked me into get a long position with Tesla. This RSI divergence is a very, very powerful sign. It's a leading sign. It's not a lagging sign. that is pretty much telling that the bulls are losing momentum, and it should be about time for the bears to step in. No, no sign is 100% right all the time, but I like very much the bearish divergence or the bullish divergence. A couple of stocks are triggering those signs this week, by the way. I just wrote about them, so drop by my website, and you can see like this. That might be bottoming. You never know. We have to let the market give us proof beforehand. Getting back to Tesla, yeah, this is RSI bearish divergence. Would until I will not get into this trade on a long side. I will not trade this breakout, especially when you realize that this trade was very extended by the time. Uh, it was triggering a lot of FOMO throughout this uptrend. But let's get to some more juicy stuff. Okay, not in the bull market anymore. Okay, the surprise. Okay, what else we got here? Um, this price action, it's very. I mean, there's no pattern here. There's no nothing. It's just very shaky all the time. It's just a disaster. This price action. It's typical of distribution phase. What we have here. Let's look at support levels. I would say it should be somewhere around here. See these rejection candles. Let's see what the price vol analysis has to say about it. Support and resistance levels. Okay, there we have one here. Yes, surprise. Here we go. Here's our support. Upcoming support level, which is being respected by these two candles, the last two candles. What can you expect here from Tesla? Let's look at we don't have any chart pattern here, neither like an ostensible trend. This is very, this is typical of this distribution. Let's look at the weekly time frame to see if we can get some more clues about what Tesla is doing. Yeah. I see nothing, no pattern. Just maybe what? Maybe see just this supply area, seller stepping in and rejecting and selling here, selling here once again. Bull stepping here as a support and buying here with a little bit less strength. And now it bounced and it was still here, which is a bearish sign. Let's look at the EMAs. Yeah, EMAs confirmed that. That's also a very potent signal. This crossover here. This is a 10 EMA, the green one, and the red one is a 50 EMA on the weekly time frame, which should correspond roughly to a 50 EMA on the 50 EMA and a 200 EMA on a day time frame. And the crossover between these two. So when the faster EMA crosses below the slower EMA, this is a very ostensible bearish signal. It has a name. It has a catchy name for it also. It's called that Death Cross. Yes. Very powerful sign. You might recognize the bear market from Tesla. If it's not already in a bear market, let me see how is it. Peak to value so far. Oof, hell yes. Even further. What will be the next level of support? This area here. Yeah, no surprise also. So my first inclination here, my first bias, of course, taking into account the weekly time frame, is yes, we got the price trading below the 10 EMA and 50 EMA. My first bias is to look for short opportunities. And what do I see that can happen here? Most definitely, something I can see here, for instance, that could be a feasible scenario would be a head and shoulders pattern. I could definitely see the price with his left shoulder, head. I could definitely see the price bouncing back a little bit to the 10 EMA, 50 EMA, which were just seen, bouncing back to the support area and breaking below this area. Something like this. Yeah. Exactly, something like this. What I don't like about, so basically, yeah, of course, if you're trading an eventual pattern, you'd only enter when there's a breakout. And what I don't like about this setup is that the most obvious target as of this breakout would be this support area, which would be the upcoming support area. And this leaves very few meats in this trade and a very poor risk reward ratio. What we could do is we could just trace the price, either 10 EMA, and just exit the trade as soon as we have a breakout from the 10 EMA. It's not an ideal setup anyway. It, I mean, the price action, all the signs we're getting here from Tesla, they're all telling us that we should go bear, we should look for bearish opportunities with Tesla. However, I also do not. I mean, unless you're trading like faster time frames, for instance, and you can. It's not my style. I like the slower time frames, for instance. But we could trace like a 200 EMA here, for instance, is the 50, and this risk to reward would be a little bit. How much is it? 1.03. Okay, it's a little bit better. It's still very poor. I mean, 1.52 should be the minimum for you just to put your capital or it's not going to risk $1 to get one. It's not good math over the long run, I'd say. So yeah, my bias with Tesla is short. Would it be a good idea to trade Tesla short right now? Maybe not. Maybe not. Maybe the opportunity to trade Tesla short has left us already behind, and it was somewhere around here with this doji. Yes, 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 yes. We've seen this bearish divergence on the other side, and then once again, it did what it does the best. It's just foreshadow the non-continuation of the uptrend. In this case, a downtrend from Tesla. So maybe at this doji pattern, maybe enter next trade, or enter once you got the break of structure in a lower time frame, namely here, for instance, say at this breakout or at this rejection candle, retest candle, for instance. Now I don't think there's a lot of meat out there, and even then, I'm coming target profit would be somewhere around here. So not there's better stuff out there to short if you're into shorting, I would say. Having this said, what follows is that if our bias is to short, I mean, looking for bullish opportunities with Tesla is almost right now, as pursuant to the clues that the market is providing us. I mean, you tell me what you think. But no, I mean, let's look at the charts then and see if we can envisage also a bullish trade. So this was support. If I were to trade Tesla on the bullish side, what I'd be doing would be first of all, I will not trade Tesla on the long side unless the price was above both these trend lines, and ideally the green trend line, the EMAs. I'm sorry, and ideally, I'd say ideally, but I mean it'd be mandatory for me that green EMA to be on top of the red EMA here. So I'd enter a position somewhere around here in this breakout. And my target profit would be this area here, which is the area where the bulls have typically been, and it would look something like this. Take profit below this support area, stop loss, excuse me. Okay, and this would be a much better scenario for me to a much more meaty scenario. It would make a lot more sense to risk my money this way, if and only if I got enough evidence from Tesla that this should be a feasible scenario or something that could be happening with Tesla. Not with the current state of things. Oh no, it looks very bearish right now. I wouldn't dare stepping into this bullish trade right now. If yes, if however I see like a bullish candle piercing through these EMAs and I see them crossing over again, maybe it will be a feasible scenario for us to step in this bullish trade, especially if it also like increase volume here. Maybe it'd be a feasible scenario to do it. Right now, I don't see it happening yet. Let's see what the market unfolds for what's coming. Um, and that's it. That's pretty much it. I mean, again, general advice: be very careful. I'm not a financial advisor. I like trading. I love trading. I've been trading with good results over the past years. I've read a lot. I've tried a lot. I've spent a lot of time on the charts. I love them. I like this. I understand them. Um, but I'm not a financial advice. Trading is risky. You can lose money. You really need to be a pro. You really need to know your craft. You really need to prune your. You need to have a strategy. You need to have discipline to follow it. You need to quantify your strategy. Uh, you need to know what the stocks are meant to do while you're in the trade. You need to know how to regulate your emotions, not to fall prey to FOMOs or fall prey to fear of losing, and instead take advantage of these human biases. You need to uh, understand price action. You need to fundamental analysis if you're into it. Of course, there's a lot of strategies out there, but it's not just about the entry and the exit. It's most of all, yeah. What I want to underline the most is risk management. Risk management should be the start. The tough part is that the odds are risk management is the last thing that you're going to pay attention to. For me personally, with my journey, uh, when I started, I just they didn't give a damn about the risk management. Really, it was for me. It was entries, exits, and I thought they'll do it, but ended up learning the hard way that it's now it works. That the risk management is the most important part of the trade. There are a zillion profitable strategies out there, but if you don't manage risk, one trade can wipe you out. One trade can just destroy your capital, your equity. That's it. That's why you need to manage risk and trade like a casino. You don't see casinos allowing bad gamblers to bet enough to put in jeopardy their survival on the market of the casino. They have limits at the tables. They don't let you leave them under the risk of getting bankrupt if they win the trade. That's they know that if you keep on spinning the dice, if you keep on spinning the roulette over the long run, their 1% edge is gonna put money in their pockets. So their job is just to make sure they're not that in between and that they keep on rolling the dice. That's what I do as a trader as well. Like really, just make sure you protect it. Make sure the next trade is not going to put in jeopardy your equity, and make sure you still have equity to keep on rolling the dice, to keep on pulling the roulette button, and keep on trusting the long-term numbers, which you need to know as a trader. Having this said, it's all I got for you guys today. I wish you guys an happy weekend. I hope you guys really enjoy your weekend, prune your short lists, get your things together for the upcoming trading week, and spend time with your family and friends and have fun because market is great, but you also need your rest. You also need to keep your emotions in place, and that's it. Enjoy, guys. Thank you so much for dropping by. If you liked what I did here, just drop me a comment, share, interact with me, teach me something, challenge what I'm telling you. I'll be more than glad to discuss with you, whichever you have to tell me. All right, cheers. Thank you so much.